TGIF Warriors, how are you? Everyone doing okay? How you, Brand? Joe, welcome to F.A.C.E. I'll show you 3-drive. AJ, how are you? Michael Weissman, whole team.
Good morning, Coach.
Good morning, Blake.
Good morning, Dale.
Good morning, guys. So why don't we start with Ryan? What was the most important market event to you this week?
Oh, this week.
Yeah, it's Friday.
Yeah, good question. What was the most important market event? I think it's got to be all this China stuff coming out and the breakdown in stocks.
Okay, yeah. Breakdown in stocks. Continuing.
That's a bit talking.
That's all right. You know, it did happen this week. I agree with you. Kman, how about you? Could it be that the yen finally experienced some safe haven buying yesterday with a little follow through today?
I wouldn't qualify that as the main event of the week. I think we're all indeed watching China and risk in the global sense of the word. You know, it's still all one pot. If you look at equities coming down, weighing on the antipodians, then China stepping in, just temporary relief, but now actually China keeping CNH where it is, or CNY, CNH where it is, could actually be very counterproductive for the rest of the risk assets. So you can't sell China, sell the correlations, you know.
Mm-hmm. Yeah, I think Pinkert said Wednesday, be aware of a potential little mini crash in the market. And you know what? We're going to find out if who wants to go home long this weekend.
Wait, do we have any full moons going on, Dale?
No, but there is an eclipse in mid-October. That's when I think a lot of it will be over to the
Sorry,
downside.
didn't mean to interrupt. That was wondering if that was the case.
Well, you know, you're a romantic. Maybe you'll take your wife out and sing her a song under the full moon.
Didn't mean to interrupt.
You know what?
Kay.
It wasn't a full moon call. It was a break of a trend. It was getting negating the overthrow. So it really wasn't tinfoil hat stuff. It was pretty classic technical analysis. Anyway, the dollar, unrelenting, grinding. We can just keep going. I mean, there hasn't been a good pullback. There were 2 good pullbacks all the way up, and they lasted a few hours. So are we going to go to this 105 level or pull back sooner? There is a big weekly moving average up here that I think it wants. Okay, 470. The question is, do we back off first and, you know, take some pressure off the market? If the dollar weakens and the market doesn't respond, then there's big problems. So I don't know, what are you guys doing with currency here? You still playing alongside the dollar, looking to fade the dollar?
No, I'm still mostly bit long dollars. Well, I mean, luckily versus the weakest. And I'm not going to put the euro in the same pot, but like the antipodians, a bit of Canada, a bit of China. Yeah, I don't think, I mean, fundamentally nothing really has changed. Then we had the break in risk. We have the issues in China. There's little reason, barring, as you rightly pointed out, those blips and setbacks. Breakdowns are holding, and yes, that level, that trend line on the Aussie, I'm really eyeing that.
Yeah, so I wanted to answer Joe's question. Joe, this could end up being a 3-drive. You know, here's drive 1, here's drive 2. So they're not triple tops or bottoms, but they include 3 attempts with at a bottom, marginal lower lows. The RSI doesn't look that good here. It might have to do some work, but so you're looking at this 63.20 level.
I
came in.
got it slightly higher. I think you missed your second low there, perhaps by a few.
Oh yeah, I did. Look, oh my gosh.
Yeah, I think it's around 50, 60. So if I get that, I'm going to lighten up and travel very light into the weekend.
Okay. All right. Gold trying to come out of here, really due to, you know, at least pop. So I don't know if I think Stell would have called it a breakdown. I don't know if he's here or not. He was looking for that gold to break down. Oh, he's on vacation. Okay. So any feel on the metals here, Blake? I think I agree with what Greg said the other day.
Which was, I forgot what he said. So
Eventually he's kind of looking for 1800 in the gold, 1780.
As I pointed out on the trade-off show this week, we've talked a lot about it on the ForexAnalytix, community shows. There's a quadruple confluence at 1890, horizontal support, 38% retracement, 200-day moving average, and also broken trend line. So, I think the risk is that we start breaking through those stops. But yesterday we dipped slightly below 1890, I think by maybe like $6 or $7, and pop back up. But I think these are really, really key levels. I think one of the big drivers right now is yield. So if yields continue to go higher, gold's probably going to stay under pressure. We saw yields reverse yesterday right off the highs. So it's a hard call. And for me, I don't want to be short gold. I sure as hell don't want to be short. I'd rather be long. But at the same time, it's hard to stand in the face of, just this weakness that we've seen in precious metals, not just, gold, but you see it in silver too. So I don't want to stand in front of it and say, well, I'm a gold bull, so I might as well just buy it here because it's at support. I kind of want to see how it reacts at these levels. I would, if gun to my head, I'd rather be on the long side and just close my eyes for a couple of months, but a lot can happen in a couple of months. So, it's hard. It's really a big inflection point. Just to really answer your question in a short manner, it's a very big inflection point here.
Yeah. Okay.
And I
would go ahead.
And I agree with what AJ is saying on the chat. He says silver is holding, which is big. Okay, I'm not going to go that far, but it's quite significant indeed. Yeah, because the economic data and with what's happening in China and knowing what an industrial metal silver is, it would have been logic that it would have followed the rest down the drain, and it's not. It's holding pretty well, that silver, in my opinion.
Are you long here?
Or
are you long here?
Well, I'm long-term long, but I'm trying to patiently wait for another drop to add, but I'm not getting it. That is what I will.
Yeah, but you'll get a little rally first, but I think you'll see $20
and then rally it later when the situation will. I'd rather have it to go lower first so I can add, and then the situation may turn around economically, and perhaps then we start to really rally.
Okay, well then don't worry about a rally back to 24 or so, because I mean that's what I think is going to happen. Maybe we get a pullback in the dollar. Been saying it all week, and we get a little bear market rally in silver up to that moving average, and gold maybe up to this moving average, and then we head back down again. So the dollar corrects while the metals bounce. So anyway, bonds seem to be losing downside momentum a little bit. I mean, I wouldn't call it a flight to quality, but it is kind of a little blue candle. We did diverge. It's going to open higher, maybe leave a little island. I'd be careful about the short side of treasuries now. I think Welsh was talking about 93. I don't know if he thought it was going to make a new low, but
I don't think he was talking it would get down this low. I think this move has probably caught a lot of people off guard, but yeah.
Yeah, I think I remembered he said 93 on his writings, but he's not behind them there. Anyway, he caught the S&Ps pretty good, 60 handles from the top. Anyway, negative week in the S&Ps. I don't know how you could say anything other than that this was the event of the week, a trend break. And, everyone's, the narrative is buy this break, right? Everyone's going to buy this break at 42.
Let's stop for a second and talk a little bit about, all the headlines that have come out regarding China overnight. I mean, it is literally, and Mark in our chat room, he's like, wow, the nonstop commentary from China overnight has been, the rhetoric has been crazy. So Ryan, with you and Kman, and I think Stelios is out. So with you guys on the Flow Show, how, when you first got up in the morning and you see that, there's the bankruptcy of what's it, Country Garden,
Evergrande.
whatever the name
Sounds
is.
like a restaurant.
It does. It sounds like it does. Country Garden Inn, like I just checked into the Best Western, I don't know. Anyway, but you see all these bankruptcies in China, real estate markets coming unglued there. As I, said in my tweet, it's like a just like this doom and gloom negative feedback loop that we're getting in China. What did you make of all of these headlines that have come out overnight through Asia and even in the European hours, Ryan?
Well, the Evergrande one obviously relates to the US because it's that entity over there that's filed for Chapter 15 bankruptcy. So it's going through more restructuring. I mean, this stuff's been rolling on for over a year now, and
a couple of years, yeah.
And we, China was supposed to go pop when it first happened, and they didn't go pop. So obviously, it's another negative brick in the wall on top of the data, on top of geopolitics, on top of everything else, and hence why the market's taken a Dow view of it. But you've got to look at it in context, and what the officials are doing. I keep saying it. China's one country. You listen to what the officials say. The Fed, the RBA, the BOE, the ECB, governments can all come out with their own crap. When these guys tell you what's happening, that's what you need to listen to, because they will move the market their way if they need to do so, more than any others. Call it manipulation, call it what you want. So for me, I think now they are talking much stronger in terms of the currency and not letting it go as far as it was before. They're doing more than they were previously. But on the things like the bankruptcies and that, they'll contain it. They have to. They won't let it pop. It's a pride thing. It's an international thing, and it's a domestic thing. So they will keep it contained. However bad it may get, they will keep it contained.
Yeah, that's a great point. Kman, what are your thoughts here regarding everything that's happening in China?
I think it's bad, and I think it's just a combination of they weren't prepared, so now they have to step in. I think they are going to just try to keep the yuan where it is right now, or perhaps even try to strengthen it a little bit into that Brics meeting next week. I think that's going to be important for the next direction of all of these. They can come up with plans. Of course, it's about the Brics and all the countries and stuff, but they will probably have the loudest and biggest voice in there, and they can come up with stuff, and we wake up on the 24th and dollar China is at a different level. It's all possible, but for the time being, I think they are really trying to contain stuff, but it's not as good, and that's where I don't really agree with what Ryan says, that they are just going to take care of it just like that, and it's going to go away. Don't forget that Amundi, which is the biggest European asset manager, earlier this year said that they were piling into China. And I reckon those people, they are going to be forced, or they are now probably revising and readjusting, because things are not going the way they planned. And that's what we are seeing now. And those guys, they are not just retail traders who go and buy and sell a couple of contracts,
Yeah. So the notion that that China is going to try to contain it, they could contain it, but it's not like they're the only ones that are invested in China. You have so much you have so much money that's invested in China globally. And so what you're probably saying here too is there could be a ripple effect regarding all of these.
We're already in the middle of one, aren't we?
Yeah,
The US
exactly. We're
decoupling from
already
China.
living it, right? I mean, if you look at the antipodians all over, the oil is struggling. You look at the equity markets. I think it's all a result of, and even the yields. You know that spike that we had in yields is seemingly attributed to China selling treasuries because they want to fund their dollar sales.
I was laughing because you guys know Dale and I, we live on the West Coast of the United States. So we get up at, the time that we get up is at 3-4 a.m. in the morning, depending on the day. And it's just about an hour before we start. So it's like, I sit down with a cup of coffee. I'm like literally rubbing my eyes, trying to get all the sleep out of my eyes, yawning, and Dale's doing the exact same thing. And we're trying to just get a grip on everything that's happened overnight. And like look at charts and, read headlines and stuff. So, that's where ForexAnalytix comes in pretty handy when, I can go through and just read all the major headlines that have been happening, then go through and figure out through our chat rooms. We have a great, news portal here where we have everybody that's posting, what's moving, Bloomberg headlines, what's moving the markets, yada, yada, yada. So we can get caught up pretty quick, but it's funny. I'm sitting here just like listening, looking at the markets and looking at like the headlines that come across the market. And what hit was, China asked private funds to consolidate confidence in stocks. I mean, that headline came out like, maybe 20 minutes after us being awake, and futures just continue to dribble lower in the US. And and I said it in the chat room, it feels like to me, these headlines out of China is, more desperation, and North American traders aren't buying it. They're like, yeah, I hear what you're saying, but we're going to hit the bid anyway. As Dale pointed out, we're kind of broken down here, and you can see equity markets have broken I'll just, show you here. We've broken, ascending trend lines. All my, there we go. There's all the analysis. We're getting to the previous 618 retracement. First level of support was really 4320, where we're literally like 15, 20 points away. That was a previous 618 breakout point, big support zone that you can see that we've had drawn on here, like literally for the last, several weeks. Here we are really back at support. Does this, all of this, here we are going into the end of the week. And this is a question for the three of you guys. I'll ask the three of you guys here. As we get into the end of the week with everything that's happening, do you pull the plug? I mean, yesterday in the chat room, I'm like, yeah, you got to be careful as we go into Asia. We're going into the end of the week. Who wants to be long? It's like, oh, and you see the S&P continues to sell off, another percent. Going into this weekend, I have to ask the same question as we head into North American trade. Who wants to be long? But we are heading into support. So what do you guys think? Do you think we can regain our composure here? Or do you think that we just continue to see selling going into the weekend? What are your thoughts?
I'd add the opposite side as well. Who wants to be short after such a big move? I'm short, and the risk to me is that China comes out with a big cannon. Bigger than.
Explain what a big cannon would look like in your view. What's a big cannon? I hear what you're saying, but
cool. Yeah,
what would it look like?
I said it earlier this week. If they came out, and I think I saw it touted somewhere on Twitter yesterday as well. If they came out and said we're going to give tons of money to the consumer, just helicopter money, bosh, done. We're going to draw a line in the currency. Banks we're going to use reserves. Cut RRR. If they go hammer and tong at it, the market isn't going to take that as another central bank easing. They're going to take that as, right, finally China are putting a backstop in this. So things shouldn't get more negative than they are now. So that's, the longer this goes on, the more markets worry, the greater the risk of China coming out with a big cannon. But on the flip side, if they don't, then if you're long, you're going to be careful, because you might wake up on Monday morning and the markets are even worse. So it's, the longer it goes, the effects become more two-sided in terms of what the markets will do. I mean, as for the S&P, 43.30 is probably that same area you've got there as support, but that's the start of a level. We've got the 38.2 fib of the March run higher at 4,300. It's a big zone going all the way back to 2021, a big traffic area, that 43 to 43.30. So that to me is the biggest test of the March rally, or the October rally so far.
Yeah. All right. Well, Kman, what are you thinking going into this week? Well, what do you think the market's thinking going into this weekend? How about that? And by the way, we don't have any data, which is great.
Yeah, I think the market is scared to be long risk right now. I don't know whether into the Friday people will pair positions or so. That's all possible, but I think the market is the real market, I reckon, is already looking at what's going to happen in that Brics meeting. It can have a big impact, despite what everybody may think. It can have a big impact. Imagine that Saudi Arabia joins the Brics. I mean,
yeah, I'm with you. Yeah, I hear you.
Panic stations in the Western world. Huh? I guarantee if they join the Brics, that's panic stations in the whole of the Western world, because that's turning their back onto the West, basically. And I'm not saying it's going to happen, but they are there and they are candidates. There's 50 countries over there. The only thing that the West now can hope is for India and China not to come to an agreement, and because they don't like each other right now, and they keep everything status quo, and then you're going to see probably the opposite effect, like Rand weaken, Chinese yuan weaken, trying to weaken again, perhaps more pressure on Aussie and Kiwi. But I mean, and that, based on that, I don't think the market will want to be anywhere long risk going into the weekend. But looking at the moves that we've had already, I don't think a lot of people are long risk at this stage, right?
No, I mean, well, you're probably talking from a trader's perspective, but don't forget, traders are traders. Institutions and hedge funds and mutual funds and institutional money are way different. So yeah, we may not have you may not have traders long risk, but you sure as hell have funds that are long Apple, Microsoft, Nvidia, Amazon, Google to the hilt, and they are way over leveraged and way positioned long. And they are the ones that you have to really start worrying about during a cascading event. When the markets start to move lower, it's not the traders that are positioned one way or the other. It's the institutional money that says, well, F it, I have to get out. Like, I have just watched my annual returns disappear literally over the last week. Yeah, but those are the people you have to worry about.
That is what I'm saying. People will not want to be long risk. And for those who are long this Apple and whatever, I wouldn't worry about the asset managers. They have their models. Their models will already have told them, or flashed orange lights and things, and I wouldn't worry too much about them, to be honest. But in their place, I would say they are not going to go long or overweight. Let's put it that way. No, they're always long something, but they might not be overweight. Don't forget.
That's when you got to go onto a weekly chart and then say who's panicking. You go into a weekly chart, the S&P or the Nasdaq, and then say who needs to panic.
But that's where you, just to your point, Ryan, you can also say we are literally forging a lower high right now in the Nasdaq, based on, look at the last 3 weeks. You don't have to base it off this week's very negative candle. You can just say that's worrisome right now, right?
I'm not saying it's not, but look at this. Look at this dip versus the dip we got back in 2022. And that was a big panic move, apparently. This move is nothing, is not panic yet. This move off the highs.
Not yet, but all these headlines that are coming across the wires, it's like, okay. Come
and see me when the 50 fib of that move from, what is it, October December. That low you've got down there at, I can't see it, 10.45, 10.445.
Oh, wait, are you talking about the chart I'm looking at right now?
Yeah.
Yeah.
So that bounce off the low that we saw late last year. We're not even close to the 38.2 of it from top to
No,
bottom.
you're not. You're right. Yeah, and you can actually just measure it this way. So yeah, you can see that. And no, well, actually we are at the 24% retracement. So there we go.
Exactly.
You know,
You're right
so,
at the 23.6. Yeah.
yeah. So I'll tell you guys, it's one of those, and it's tricky. I'm not gonna sit here and say one thing or the other, but I will say that I always try to think of who's on the other side of the market. And if I was long, I'd be a little concerned.
Yeah.
Right.
It always pays to be aware of the risk, no matter whether you're long, short, or neutral. Just know what the risk is at the moment, any given time.
Yeah. So Dale, what are you thinking here, buddy, as we head into the weekend? Are you shivering in your boots, partner?
Well, we're going to have a hurricane here in California.
That's funny. Somebody said that to me. Kman, wasn't it you that said it to me? Like,
Yes.
We might get a hurricane in Arizona. I'm like, yeah, I don't know if it's going to make it over our.
So they're happening everywhere. Hurricanes in the market, hurricanes in California. It's batten down the hatches, buddy.
Yeah, so
I think we'll be at your 200-day and trend line that kind of are running together on the daily by Tuesday.
Wow, that's by Tuesday. Looking at Dale by Tuesday. There's some big calls. Noster Pinkert making some calls. Hey, I do want to say, regarding the markets and heading into this weekend, there are risks. I think, Kman, you make a great point with the Brics commentary, which what could happen there. It's one of the reasons why I just took my dollar CAD off. I've been long pretty much, since 131 and change, and I just pulled off the entire position this morning as we're just shy of the 618 retracement. So I basically have gotten that out of it.
Let's see your VIX chart. Like, if you have
the VIX is trying to break out. We're above 18. So
it's pretty good.
Yeah, we're pushing the 200 DMA. So, the risks are starting to increase that, obviously we're going to see some volatility here. So, but I'm worried about that, genuinely about being long the dollar as we head into the Brics meeting, and headlines, I think, could come fast and furious. So, Ryan, have you had any thoughts about this Brics meeting and what could happen?
Only what my wise and esteemed colleagues have been saying about it. Like, hey, it's a risk event. I can't do anything about it. The only dollar longs I've got is dollar CAD. So I'm long from down below like you. So there's plenty of room in it. If something does happen, that's the only saving grace. I might get knocked out my top side entries. It's one of those things. It's an event. You can't do anything about it. Either something's going to happen or something's not going to happen. And I'm not going to let it affect me too much.
Yeah. Okay. Kman, any last final thoughts as we head into we ride off into the weekend here?
Yeah.
Oh, and by the way, I almost forgot. But I'll come to it after you're done, Kman. Go ahead.
Yeah. Okay. I'm as I said earlier, I'm looking into these moves to lighten up the books a little bit, going to the weekend, and then wait to see what happens next week. It's the dollar is big again. Yields are ticking up again, and I reckon that is not going to reverse today. But it never hurts an account to take some profits.
You've never met a rich man or woman when broke taking profits, right?
Exactamundo.
All right. Well, I was thinking into as we head into this weekend, you obviously need to be be a little bit more cautious. I'd be careful with dollar positions. I don't mind having dollar short positions, but having dollar long positions, you know, I mean, that's obviously a hedge. If you're in a situation like Ryan, you're in good shape because, you know, you're holding longs from, you know, 132, 131. This is the problem with North American traders like us that are, you know, we're out of North America. We have FIFO. So all the stuff that I bought at 131, as I've taken profits along the way, you know, as we, you know, bought and sold, my averages have moved higher every time I buy and sell. So it stinks. I wish I had like one position that I've been long since 131 that I could just sit in, but that's just not how it works for us. But I think it's been a hell of a move, Ryan. So well done on your part. Dale, any last minute thoughts as we wrap up going into the week? Oh, and wait, before I just did this to Kman, let me just mention Bitcoin.
Yeah.
If you guys didn't see it, man, what a move last night, right? We just absolutely got hammered, and we went to, and this is not good. This is not good data. This is North American data. So take Bitcoin like via Coinbase, you can see the spike low right to 25,000, which is a very big pivot. You can see this green line here. It's huge, right? So Dale, what any last minute thoughts for you?
Yes, I'm going to play some Jethro Tull, Thick as a Brick. Afterwards, I'm going to KJ. Do you know the band, Ryan? Are you old enough?
Yeah.
All right.
He's
So,
old enough to remember.
you know, are you Aqualung? I'm just kidding. Anyway, so that's it. Thick as a Brick. I'm going to be playing. And
All right. Well,
it's a great. I had a good month this week.
you had a good month this week. Those are
Yeah.
great. Those are great weeks to have.
Yeah, they don't happen all the time, man. I usually have a bad year this month.
Arithmo asks about the euro US dollar really quick. I just see this one last comment. I mean, look, we're below the 618. I think key support comes in at 108.30. You know, channel support below that, you know, is a risk. And then, you know, when I say channel support, there's two channel supports you got to worry about here. You got this channel support that comes near the 200 DMA, but just below that, the longer term channel support. So those are levels that can be tested, and I think you've got to be you know, looking for them. I wouldn't necessarily be bearish, but if I was long, I'd be thinking, okay, can I sustain a move down to 107.50? And I think you got to be prepared for that. It's only about 100 pips away. So all right, guys. Well, I want to say have a great weekend, everybody, and thanks everybody for tuning in on a Friday. It's gonna be a wild one, so I think you need to, you know, play defensive a little bit over the weekend. Any last minute words, Ryan, Kman, Dale?
Have a
Have a
great
great
weekend.
weekend.
Come on over and help me fill up some sandbags.
If that hurricane makes it over to me, will absolutely
The last time it happened was in the 30s. That's a long time.
Yeah,
Yeah,
1939, wasn't it?
Yeah. Oh, 39. Okay. That's a good year.
Could happen. It could happen. All right.
All
well,
right, anyway.
time to batten down the
Back to the
hatches, folks.
future.
All right. You guys all
Back
have a
to the
great
future.
weekend. Yeah, go ahead, Dale.
No, that's all right. Yeah, I was there, Mike. 1939. I was in high school. Okay. Anyway, guys, have a great weekend. Action-packed week. Great call came in on near the high in the end this week.
No
The
problem.
picture's changing. Ryan, you've been trading like champion, and Blake, you're always good. So great hanging out with you guys. Hey, everyone, this weekend, sign up. I told you August wasn't going to be quiet. The bears don't go into hibernation until the fall. So get ready. It's just beginning in my view. So have a great weekend and get prepared and diversify your bank accounts. Don't have it all in one bank.
And
I'll
thanks
see
to you, Dale, for driving the bus.
That's right.
You know,
Thanks,
it's great
Coach Driver
singing
Dale.
100 bottles of beer on the wall with you guys every week. So you too, Amira, Shabbat Shalom. Everyone have a great weekend. Thanks for supporting us. I hope we've added value to what you're trying to accomplish this week. Adios.